Hey there, everyone. Welcome back to the channel where we talk about making smart choices for a brighter future. Today, we're diving into a super important topic: how to save money in the US so you can enjoy financial security in your golden years. We all dream of a comfortable retirement, but let's face it, getting there can feel overwhelming. Don't worry though, by the end of this video, you'll have a clear plan to boost your savings, secure your financial future, and enjoy peace of mind in retirement. So grab a notebook because these tips are going to be life-changing. First things first, start early. I know, easier said than done, right? But here's the deal: thanks to the power of compound interest, the earlier you start saving, the more your money can grow over time. If you're just starting your career, aim to save at least 15% of your income. And if that feels like too much right now, don't worry. Start with whatever you can manage and work your way up. Pro tip: automate your savings. Set up a direct deposit into a savings account or retirement plan like a 401k or IRA. This way, you're saving without even thinking about it. It's like paying yourself first. Next up, don't leave money on the table. If your employer offers a 401k with a matching contribution, max it out. This is essentially free money toward your retirement. And don't stop there. Explore other benefits like health savings accounts, HSAs, or flexible spending accounts, FSAs. These tools can help you save on taxes and medical expenses, freeing up more cash for your future. Okay, let's talk about budgeting. I know it's not the most glamorous topic, but it's a total game changer. Start by tracking your expenses for a month: every coffee, every subscription, every impulse buy. Once you see where your money's going, you can identify areas to cut back. Maybe you don't need all those streaming services or that daily latte. Small changes can add up big time. Try the 50-30-20 rule: 50% for needs, 30% for wants, and 20% for savings. It's simple, it's effective, and it works. Saving is great, but investing is where the magic happens. If you're new to investing, don't worry, it's not as intimidating as it seems. Start with low-cost index funds or ETFs, which give you broad market exposure without the high fees. And if your workplace offers a target date fund in your 401k, even better. These funds automatically adjust their risk level as you approach retirement. The key here is consistency. Invest regularly and don't panic during market downturns. Remember, investing is a long game. Debt can be a huge obstacle to financial freedom, but you can tackle it. Start by focusing on high-interest debt like credit cards. Pay more than the minimum each month to get rid of it faster. For lower-interest debt like student loans, consider refinancing to get a better rate or paying it off more aggressively once you've built an emergency fund. One of the best ways to secure your future is to protect yourself from the unexpected. Make sure you have adequate health, auto, and home insurance. And if you have dependents, life insurance is a must. On top of that, aim to save 3 to 6 months' worth of living expenses in an emergency fund. This way, if life throws you a curveball, like a medical bill or a car repair, you won't have to dip into your retirement savings. Social Security is an important part of retirement income for most Americans, but timing is everything. Did you know you can increase your monthly benefits by waiting to claim them? If you claim at 62, you'll get less than if you wait until your full retirement age, and even more if you hold off until 70. Plan your claiming strategy carefully to maximize what you receive. Q&A section: saving money and securing retirement in the US. Q1. How much should I save for retirement each month? It depends on your income and retirement goals, but a general rule of thumb is to save at least 15% of your income, including any employer match. If 15% feels out of reach, start small, even 5% or 10%, and increase it gradually over time. Q2. When should I start saving for retirement? The earlier, the better. Starting in your 20s allows you to take full advantage of compound interest, where your money grows over time. If you're starting later, don't panic. Just focus on saving as much as you can now, and consider working with a financial advisor to maximize your efforts. Q3. What's the difference between a 401k and an IRA? A 401k is typically offered by employers and may include matching contributions. It has higher contribution limits, but fewer investment options. An IRA, or individual retirement account, is something you open on your own. It has more flexibility in investments, but lower contribution limits. You can have both to diversify your retirement savings. Q4. Should I pay off debt or save for retirement first? It depends on the type of debt. Prioritize paying off high-interest debt like credit cards because the interest can outweigh your investment gains. For lower interest debt like student loans, focus on building an emergency fund and contributing to retirement savings while making regular payments on the debt. Q5. How do I make the most of Social Security benefits? Delaying your Social Security claim can significantly increase your monthly benefits. If possible, aim to wait until your full retirement age, around 66 to 67, or even until age 70. Use online tools or consult a financial advisor to find the best claiming strategy for your situation. Q6. What's the easiest way to start investing for retirement? The easiest way is through your employer's 401k, especially if they offer a match. If that's not an option, open an IRA with a low-cost provider like Vanguard or Fidelity and start with index funds or target date funds. Both are beginner-friendly and provide diversified investments. Q7. How can I cut back on expenses without sacrificing too much? Start by tracking your spending and identifying unnecessary expenses like unused subscriptions or dining out too often. Small changes like meal prepping or canceling extra streaming services can add up. Use budgeting apps to stay on top of your finances and redirect savings toward your retirement goals. QO. What's an HSA and how does it help with retirement savings? An HSA or health savings account is a tax-advantaged account for medical expenses. It's triple tax-advantaged. Contributions are pre-tax, growth is tax-free, and withdrawals for qualified expenses aren't taxed. After age 65, you can use HSA funds for non-medical expenses without penalties, making it a great retirement savings tool. Q9. Is it too late to save for retirement if I'm in my 40s or 50s? Absolutely not. While starting earlier is ideal, it's never too late to make progress. Focus on maximizing contributions to retirement accounts, cutting unnecessary expenses, and delaying Social Security if possible. Catch-up contributions in 401ks and IRAs can help you save more as you near retirement. Q10. What should I do if I feel overwhelmed by all this? You're not alone. Retirement planning can feel daunting. Start small. Pick one action, like setting up automated savings or tracking expenses, and build from there. Don't hesitate to consult a financial advisor. They can guide you and create a plan tailored to your situation. And there you have it, 7 practical ways to save money, build wealth, and secure your financial future. Remember, it's never too late or too early to start planning for retirement. If you found these tips helpful, give this video a thumbs up and share it with someone who could use a little financial guidance. And don't forget to hit that subscribe button for more content like this. Thanks for watching, and here's to your financial success.